Hello guys, with this video we're gonna talk about how to identify the reversal and continuation with the trend. For this we're gonna look at indicator and more important the divergence between the indicator and the price section. So let's start. Okay, this is Facebook. This is the 60-minute chart. I already draw before some key level of support and resistance for me, but I don't trade Facebook. I don't know. I was probably gonna do a prediction about Facebook for the next week, but I didn't on Facebook. But for this tutorial on divergence, let's start. So what is divergence? Divergence means that the price is doing something and the indicator is doing something else. For the purpose of this video, we will look at the stochastic. Let me enlarge the stochastic. We'll look. You can also use the MACD. This is a histogram of the MACD. Or what? I'm not using this. Just okay. If you ask yourself which indicator, you want to use a momentum indicator like the RSI, CCI, percentage R, momentum indicator also, the stochastic is fine. So we look at the stochastic and let's look for divergence. So there are two kinds of divergence. There are the reversal divergence and there are the continuation divergence. Continuation, also called, if you want to look it up, a hidden divergence. Why hidden? I don't know, but maybe because people don't look for them. I don't know. I call it continuation. Also, some people call it continuation. With reversal, there are two types, of course, the reversal to the upside and reversal to the downside. And with continuation, you have continuation of the trend up and continuation of the trend down. So let's start and look and find divergence. Okay, first one. We will look, if we're looking and want to see a price action to the upside, and you probably gonna use it if you see it, the trend to the upside, you see it, the 200 EMA is pointing up. So we will look a reversal to the upside. So we have here the price did a move to the down. This is a low and this is a lower low. And what you see here, basically, the stochastic did higher low. This is divergence between the price action and the indicator. Why is that? How is that even possible? It's simple as that because this is the math behind how the stochastic is created, or the percentage R, or the momentum. Basically, all the momentum indicator calculate the price behavior, compare it to previous average price behavior. So what does it mean? If let's say you see the big momentum to the downside, it puts the stochastic in the oversold area, and then when the price moves further to the downside, you see a smaller candle. You see the close and the open are much smaller than those candles here, which means that the power of the momentum to the downside is is diminished. So this is why the stochastic is making a higher low. which means a reversal is very near. When you enter or where you enter, some people will say when you see the indicator is crossing above, you should go up. But as you see, why I don't like this, going up and moving down, going up, you will going long and moving down again. So losing, 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 and only here. Some people will say go above the 50. So you wait here and let's see where it takes us. If this is the 50, so you basically go enter here. So where is your stop loss? There, below the candle at the downside. It's very tricky to go and trade only by the indicator, but it gives you indication of what happened with the price. So I will enter maybe at the close of this candle because it closed above the resistance level, and the stop loss will be below this candle. Just an example. So this is a divergence to reversal up to the upside. Another example, if we want to look it again, price here, you see it moving down, and there it's straight line, little bit move. This is why also it's more freely interpretation, because you saw here, you know what? You saw here, it's making a lower low and also with the price, but it made here lower low. From there, started to go up. See, so basically, this is why it's a free interpretation. It's moving up, even though it's several candles before, it moved even lower. So again, we have higher low and low, and the price here, where you're gonna enter here. This is the 60 minutes, so you don't have a good indication there because, but probably if you go into the 15 minutes, you will find another better position to enter. You don't have to look at divergence at the oversold, overbought area. Some divergence even occur in the range between, but I like the oversold and overbought. It's much easier to spot. So probably there will be a divergence. There you see the price moving up. You look at the 50, you probably will enter here at the end of this candle and move into the upside. Another important thing to remember, the reversal. The reversal is a short term, just a reversal. It means that the price will move to the next support slash resistance. It doesn't mean that the price will move much higher. You want to look at continuation maybe, but for reversal, even though here it make a very high and a gap to the upside, it doesn't mean that. It just means that you're gonna have a reversal if you look at, let's see it, that the price will move to this location, maybe even this, and you have to take your profit as soon as, because most of the time the price will do just like this and then move down. So don't wait, take your profit. So this is reversal to the upside. Let's go reversal to the downside. What does it mean? Reversal to the downside. Now we will look at the high of the price. We want to see that the price is preparing for a reversal. So from here, let's probably here, yeah. You see the price making, this is a high. Sorry for the H. This is a higher high. And what the indicator is doing, something like this. This is a high in making lower high. Divergence. What does it mean again? There was a big push with the big candles to the upside. Open close, you see the spread between those, and then the spread was much smaller. So the momentum is diminished. So you're gonna see a reversal to the downside. Again, where the reversal gonna end at the next support or resistance level. So you see it ended here, high again, ended here. So remember, higher high with the price, lower high with the indicator. A good spot is on the oversold section. You're gonna see it probably again here, and you see the reversal. If you go to the 15 minutes, you see here some sort of support. The reversal didn't finish to get here because there you will stop out if you will enter. So this is why I'm talking about be very careful with your target. Another here and there downside. So you have a lot here, probably here and there. When you're gonna master it, you probably won't need the stochastic because you will see that there is a big move to the upside. You will wait for another push and then you look for entry to the downside. But remember, this is the 60 minutes. If you're looking on the 1 minute, it's a different story because with the 1 minute, you're gonna be rangy for 15 minutes, 30 minutes until it's gonna break, like mRNA on Thursday, I think, and Friday. So this is a reversal to the downside. Higher highs with the price, lower high with the indicator. But now let's look on the continuation divergence. Those are much important, and so let's see how we can identify the continuation to the upside, what we want to see. If you already understand the reversal, so for continuation, we want to see the price is going up, okay? And we want to see the correlation, what happened between those 2 points. The price making higher lows, and what we're going to see in the indicator for continuation. We want the indicator, we do, this is a low, lower low. Why is that? We want to see the indicator is doing lower low. Why is that? Because now the momentum is moving up and then a big move to the downside which stopped. It pushed the momentum to the indicator momentum below the low before, and then it stopped. And why is that? Because there is no momentum again to the downside, which means we are still continue moving to the upside. And this is very good for us. So this is a continuation momentum. So let's look it up here in, okay. So, okay, here we see a lower low, but what we see here, higher low, okay? So, which means that the momentum is still on to the upside. You see the big candle, red candle, push the price down and then stopped. But when it stopped, it put the indicator at the below the previous low of so means that there's gonna be a continuation to the upside in these scenarios. Where you're gonna enter, again, some people say above the 50. I don't like it above the 50 because you see it's too late. Remember, indicator are laggy, but they give you some nice inputs. You see here, very late. I will just go to the 15 or 5-minute chart and look for an entry point. But this is a continuation to the upside. How you can identify? You're just looking what happened between when the price, let's say here, okay? You see, I don't know the future, okay? Nobody knows the future. You just can anticipate. So let's assume this is the low and suddenly the price will continue move down. Let's say it will move, oops, sorry. And let's say the price will move down here and even to this point, but with much larger candle. And then it will do something like this below. So this is a lower low, but the price will do something like this. This means it won't do this because the trend is for the down. It first will do a reversal and then will do continuation. But it means that the downside is over and we're gonna see a continuation to the upside in the future. So I will look for entry point above maybe the 327, something like this. This is how I will act in a live action. I will look what happened here. I will wait and see how it reacts. With these scenarios, what we see here, if we see here the trend is for the down. We see here, you see, higher high, but also here high high, no divergence. You see here between those, what is this is a short continuation. Yes, no. Also, it moved to the downside. So there are no divergence here on the upside. So the price is just moving with the trend with no divergence. There are no big buyers, no big seller coming to create something else. So the momentum is still to the downside. But you know what? Let's put the session on 24 hours. Then we will see something nice. Okay, see what happened. Again, higher high, no divergence, but see what happened here. Okay, from this point, what we see here, we see the indicator making higher highs, but the price making lower highs, which means that we have a short continuation. The buyers came in with all the power, but they finish all the power here. So the price should move down again. But what we see here, the price moving to the upside, the lower, but here, lower lows, which mean a reversal. This is a reversal, which means we're gonna see reversal on Monday, guys. Remember, reversal on Monday. All the buyers came here. This is a very important. The buyers came in, they pretty much took a risk. Why is that? They took a risk. They knew that the price won't be able to break the resistance, but they started to come here and they bought the bot. So you know where are the average price. The average price of the buyers, most of the buyers probably something around 330, 331. They make a divergence. This is why the indicator are laggy, because always there are the price section and then what happened in the indicator. And then they make big move to they sold. They make profit between those entry and this exit. They make the profit, took probably half of the position, maybe 70% of the position, and started to buy again. So they bought again, they already have a profit, and they make a divergence to reversal. So the probably what we're gonna see, maybe in the pre-market, push to the downside to close maybe some small and take more buyers here from and confirmation of the support, and then we will see a move to the upside. We already didn't see here a big move to the upside, but a big up move is going, a reversal move it's going to be, and I hope it's going to be above the 332 here. But there is a confirmation. So we talk about divergence. So how are you going to trade it? The best way to trade divergence, look at them in the higher time frame of your trading. If you are trade the 5-minute, look for divergence at the 15 minutes and the 30 minutes. If you are trading the 15 minutes, look for divergence at the 2-hour and the 60 minutes. So let's move on to the 15 minutes here. See what happened. We see the price moving up, and let's see what here. The price moving down, but we already have, see what happened. It didn't move. If this was something like this, we will have a divergence continuation to the downside. But we didn't. So there are no continuation for the short side, which is good. We just have a reversal to the downside. And again, see what happened here. Lower low, by high low. So probably, I hope we're gonna see open in the pre-market something here or here, and then push to the upside. Let's hope so. So this is for Facebook. Of course, anything can happen. I don't know if tomorrow they will publish something bad for them. I don't know. It can just continue to the downside. I don't know. But at the moment, it seems very bullish with reversal. Just remember, a reversal to the upside. So probably we will see a move to the above 332 and hitting the, probably you see here a key level 336 and 339. So get prepared. Hope you like this tutorial. I was trying to explain how to look for divergence, the difference, and how to use them, even when the indicator is on a live, because this is for me live, because I don't know what will be, but I see this going to the downside and the oversold area. So let's see what happened on a Monday, and hope you like it. And if you like it, thumbs up, subscribe, and tell me what you like and what you want to see more. And I will try to do more video. Thank you, guys.